All right. Good afternoon, Trendy fam. I hope y'all are doing well on this Friday. Uh, Market is pulling back. Um, it is OpEx Friday. It's not common to see this on an OpEx Friday after a nice bullish run over really the first half of February. It's been pretty choppy, but still choppy sideways, but up. And so on Friday on OPEX, we are getting a pullback. Now, is this a pullback only to continue to the upside, or is there more downside in store? That, if I had a crystal ball and could tell you, then we would all be rich, but I don't. The only thing I can do is trade my strategy, which for me, that is supply and demand. And because the overall trend is bullish, my focus is on the upside, and I am looking to buy dips into demand zones. So, yeah, that is what my focus is. For today, what I wanted to spend the next 30 minutes with y'all talking about is how different ways that you can stay in a winning trade. Um, it's not always easy, especially if you are trading from a smaller size account that when you enter trades, you might only be in one or two contracts when you're trading options or even with shares, just a couple of shares. But I have found a way that helps me to stay in those winning trades to capitalize on as much profit as possible. First, I want to start off by saying this. I believe wholeheartedly in the fact that there is nothing wrong with taking profits on a winning trade. If your trade plan has an entry and a target, and price hits that target, and your plan was to exit there, that's what you should do. I believe that builds discipline. What I am more talking about is when you find yourself in a winning trade, you only have, like I said, a couple of contracts, or maybe you have a lot of contracts and you're just trying to play it out to full potential. Over my years of trading, I've found two different ways to stay in that winning trade. I'm going to give an example of a trade, a current winning trade, and that is Duke Energy. Okay. We in the trendy room got into this trade on the 18th of February when price pulled back into this demand zone here. Now, I scale into my trades, so I often have at least two places that I'm going to buy calls at. And for me on Duke, those places were $111, which I bought a contract there. And 109.92 was an ad. And then down here at this monthly edge mid was my third ad. So I was only in one third allocation here. Okay. We have an inside and down candle formation right here at the 115 mark. You can see that's basically where Duke is at. We trimmed the position today, and the target is 117.73 by 121.25. So this is clearly a winning trade. First thing I do on a trim is then set a break even stop for the remainder of my position. Okay. That is so that I don't take a winning trade and it becomes a losing trade. That is very frustrating. I'm going to be 100% honest, it still happens to me sometimes. Not often, but it does happen. And when it happens, it's because I do not follow my rule of trimming at the levels that I plan to trim at and then setting a break even stop. All right, so that's the first thing. After a trim, I set a break even stop on the remainder of the position. What do I mean by a break even stop? I am trading options. So for me, a break even stop is whatever price I paid for the option when I got into it. In the example of Duke, I got long Duke and I bought the 110 calls for $4.15. So my break even stop, I trimmed here at $6.60. My break even stop then becomes $4.15. All right. Everybody following me so far? I don't want to leave you behind. Just type yes in the chat or no in the chat, and I will explain better. But I want to make sure that you're following along with what I've said so far. Awesome. All right, so we get to a trim. We set a break even stop, whatever price I paid for the option. And then what do I do? There's two ways to stay in this winning trade for me. One way is using the trendy cloud. Now, if you do not have the trendy indicators, that's okay. They make life very convenient for me, but you might not have them. It's all right because there are free EMA, exponential moving averages, that you can put on your chart. It will not look like this. It won't have all the fancy buy signals and sell signals and such, but it still will give you an EMA level to help you stay in your trade. So that first way is this top EMA here is the 9 EMA. I want to stay in this winning trade as long as price stays above this 9 EMA, which is approximately $113.36. Now, what happens if on Monday we get a candle, it comes down below that 9 EMA? I don't automatically stop out. Remember, I have my break even stop, so this winner is not going to turn into a loser. But if I get a wick below my stop, I don't stop out. I wait for a candle to close below that 9 EMA. All right. If the candle continues each day to hold above that 9 EMA, close above that 9 EMA, I stay in my trade until target 117.73 by 121.25. This is the bottom of the target. This is the top of the target. I can take my profits right here at the bottom of the target. And if the market, overall market, finds itself in supply as Duke finds itself at supply, I will go ahead and take my profits here. But if the overall market has room to move before it hits supply and Duke is already at supply, then I keep in the trade inside of this target zone for as long as the first method price closes above the 9 EMA. Pretty simple, right? Awesome. All right, next way that I stay in a winning trade is using Fibonacci. All right. So I will use the Fibonacci retracement tool to measure the current, in this case, because we bought the dip in demand right here, I will use the current move. I'm not going from this wick low. I want to start my fibs from where the move to the upside began. So I will right click here at the bottom of this candle that the move began on. I'm going to measure up to the high. I'm going to look at those fibs. I'm going to look at the 382, and in this case, it happens to match perfectly the 9 EMA. Let's hypothetically say that today's candle closes right here. All right, hypothetically. Then, if I'm using the Fibonacci way to stay in a winning trade, I'm going to create an alert here at the 382, and I want to stay in this trade as long as daily candles close above 114.21. As price continues to move to the upside, I continue to move my fib retracement tool to the upside, which in turn moves the 382 or moves my stop up. So as price continues to go in the direction that I am wanting, and I continue moving my Fibonacci retracement tool up to the high, my stop continues going up. What that means is I am banking more and more profits as my stop continues to the upside. All right. Any questions about that? All right. Very cool. Let's look at a case where we are staying in a winning trade that's going to the downside. We're going to look at the ES futures chart right now, and we're going to look at how to stay in a day trade to target and possibly through target, as is the case today. All right. All right. So let me remove the fib tool and just focus on today's price action since we opened up here. This is a 5-minute chart. It's what I use to day trade. I use this cyan box right here as my main indicator to day trade. This is what we call in the trendy room the PMZ zone or pre-market zone. It is based on price action that occurs within the pre-market. All right. The concept is very simple. When price is below, and this PMZ, you will have the labels of where this is at long before the market opens. 5 minutes before the opening bell, this indicator prints on your chart. It prints on any chart that has pre-market price action. It doesn't matter if it's a forex chart or a crypto chart or futures or an equity chart. Doesn't matter as long as it has pre-market action, you get this pre-market zone. Price below the PMZ, you're looking to go short. So let's just test how first staying in the trade as long as price stays below this 5-minute cloud would have worked. This is our target. There are levels inside of this zone that you can stay in your trade. and collect profits. All right. You can see that price open below the PMZ automatically biases to the downside. All right. We want to stay in our puts or our downside trade, right? Our bearish trade, whether that's straight up puts or that is a call credit spread or a vertical to the downside, doesn't matter how you're trading it. This works for any type of trade. As long as price stays below this 5-minute cloud, we're staying in the trade. All right, here's target. Look, from the bottom of the PMZ at 61.38 to target, that's 62 points, guys. That's that's a lot of money on a day trade from the PMZ. All right. We stay in as long as price stays below this 5-minute cloud. We wouldn't be stopped out of the trade. We're in it to win it. All right, let's use a Fibonacci concept. Right here is where the downtrend began. That's where I'm going to anchor my fibs. I'm going to go down to this first candle before we got any kind of rally at all. And you can see that this candle rallied up to the 236, but it did not close above the 382. This candle rallied up to close to the 382, but it didn't close above it. We're still in the trade. Now let's go down to our next pivot, which would be right here before you got any kind of rally. The next candle goes up to the 236. Here's our 382. This is our stop. Guess what? No candle close above here. We're still in the trade. Now let's go down to our next pivot. That's where it can get a little bit more exciting. We had a little pivot there. You can see that next candle never came close. Then this pivot here. Look, this could have stopped you out of the trade for sure, right? This little bounce right here could have stopped you out of the trade, but no candle above this 382. Using the fib technique that I use, you stay in the trade. Y'all see that, right? No candle above the 382. We stay in the trade to the downside, right? All right. Let's measure to our next pivot, which, wow, below here is this one. We know that's going to come nowhere close. It's actually now right here at the bottom of our green zone, our target zone to the downside. So now we stay in this trade. Let me remove this line here. We stay in this trade as long as price stays below the 382. All right. Or you're at the bottom of this target zone and you're positive about almost 100 points. Not bad, right? Not bad for a day's work. So that's how we stay in the winning trade using the fib technique. Does anybody have any questions at all about that? All right. I'll tell you what. I want someone to give me a trade that you're currently in that's a winning trade. Tell me the time frame chart you are trading it off of, and I want to show you both scenarios of how I would stay in that winning trade. So, first one to give me a trade you're in that's a winner. So, I can give you an example that is not scripted, obviously, right? All right. Anna Marie is in Meta. Anna Marie, can you tell me the time frame chart you're trading this off of as well as your direction? Is it a day trade or is it a swing trade? Oh wow, look at Meta from EMZ, baby. What type of trade? Upside, downside, time frame. Up, swing trade off the monthly chart. Nice, Anna. Or are you in it for a month? Big difference. Monthly chart, or are you in the trade and it expires March monthlies? Wow, look at you. Guys, Anna Marie is in Meta from $310. I love it. So this is a long term, right? We're looking at, I love this. Let's take a look. So Anna Marie got in this trade somewhere right around this demand zone. Perfect. Beautiful, beautiful. Okay. So we're going to measure from where Anna Marie basically got in. Okay. The rally. Let's go little by little. So she got in here, right? Here's your demand, by the way, Anna Marie. Demand zone right there. She got in here. The first pullback we got is where? Right. Yeah, here. This candle that closed below, that would have gotten me out on using the fib technique, right? Well, not actually, because I would have started it at where the up move took off. All right. Fib technique, I would have been out. Using the 9 EMA, I would still be in the trade. But since you're still in it, Anna Marie, as long as 573.19 holds as support, I would stay in the trade. Also, look right here, Anna Marie. This is monthly demand. So they're lining up great as well as the monthly 9 EMA. I would stay in that trade as long as 573.19 holds, my friend. Oh yeah, how high to sell your covered calls, I bet. In this case, Anna Marie, I'll tell you what I would do. This is where I'd sell my covered calls. Price pulls back to this demand, I'd be happy to be assigned the shares. All right. All right. Carlos requested a chart for IBIT, the daily chart. Carlos, are you in that trade to the upside, I assume? Or are you in that trade to the downside? And by daily, do you mean daily chart or do you mean a day trade? All right, perfect. Upside daily chart. Here we go. I'm just going to go for the most recent rally. Okay. That would be from here. And this one's going to be tricky because it is very choppy here to here. All right. And I'm not sure where you got in, Carlos, but this is the most recent rally. It's very, very, very choppy, this name is. Here is the 382 support on, trying to make it bigger, the daily chart. Today's line in the sand, stay in the trade or exit for me would be, ooh, there goes a Coast Guard helicopter. Yikes. I live in Florida, guys, really close to the water. I see those a lot. 55.21. If I'm in this trade to the upside, I want today's candle to close above 55.21. All right. Using the cloud, here's the way I look at it. If I know I'm in a stock that it's very choppy, my cloud is very narrow. I mean, this cloud is less than $1 wide. It's very narrow. I'm going to use fibs. Most of the time, I use fibs. You want to use the cloud when the name that you're trading, the trade that you're is in a trend. Whether that's a downtrend or an uptrend really doesn't matter. But when you find yourself in chop like this, I resort to the fib technique. So for this trade and me, if I were in it, I would want today's candle to close above 55.21 for me to stay in. This is what we call in the trendy room the bull channel of this up move. Okay, very cool. All right, guys, I think I have time for one more. If anyone has another request of a trade that you're currently in that is a winner, you'd like me to take a look at it, you can put it in the chat. If not, we will take a look at a DOUL. DUOL. DUOL. That's what I was wondering. Is it Duolingo? All right. Time frame. Which time frame are you trading this one? The weekly. Got it. Very nice. Okay, here we go. Here's where this uptrend began. I assume you're trading it to the upside. Uptrend began. Run my fibs. 382. You're in a winning trade. This is where you got to ask yourself, and this is what I would do. I would look at how much time I have left to expiration. That tells me how lenient to be with this trade. So you choose what you want to set your stop, quote unquote, at to stay in the trade. You either use the 382, which if I was using the 382, 392.03. This weekly candle, which closes today, needs to close at or above 392.03. Or if I have extra time in the trade, then I can use the 9 EMA right here, and that would be about 372.22. Obviously, as I said when I very first started, depending on where you got in the trade, have you paid yourself some profits? And if so, make sure you have that break even stop in place for the remainder of your position. Okay, that's how I do it. So, either if I want to be more tight fisted with my profits, I'm going to use the 382. That level is 392.03. If I want to be a little looser with my profits, I'm going to use 372.22 as my stop. Oh, wow, Anna Marie. In since 2017. Woo-hoo. Way back. Way, 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 way back. Nice. From 217, you got a little bit more. Here's your demand right in here. Okay. Somewhere around 340 to 320-ish. in this area, that's your demand. Pull back to there is the buy the dip opportunity for me as a supply and demand trader. You're in at 217-ish. So measuring this move here, 382 is at 352.66, or use the 9 EMA at 371 if you're talking about a weekly chart. All right, guys, thanks for those examples that you allowed me to show you. As always, I will be back in here next Thursday to do another quick 30-minute education piece. I'm also in the room on Mondays from 11:30 to 12:30 Eastern, or 10:30 to 11:30 Central, where I talk about the swing trades I am looking to play for that upcoming week. So join me back here for either or both of those sessions. As always, much love, fam.